Chainlink is experiencing a price explosion after almost 2 years stuck in a range, and could this one thing be the catalyst for Bitcoin to explode towards $1 million? This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Altcoin Buzz, in collaboration with Engine Starter, brings you an exclusive giveaway. Now get a free 1-month Altcoin Buzz Alpha membership that includes buy and sell calls, portfolio updates, airdrops, and IDO strategies, as well as new gems and Q&As. If you're an Engine Starter staker, hurry up, sign up, and get your cash back now. Check out the link in the description below. Bitcoin faces a trigger moment that keeps a $1 million Bitcoin price tag in play, according to Arthur Hayes. In a blog post titled The Periphery, released on October 24th, Arthur Hayes, former CEO of crypto exchange BitMEX, said that Bitcoin is already warning markets about the future. Hayes believes that with the United States increasingly invested in 2 new wars, the risk of escalation worldwide is growing. The timing is conspicuous as the United States Federal Reserve faces persisting inflation but has halted interest rate hikes, while a so-called bear steepener looms for the economy. Hayes says the structural hedging needs of banks and the borrowing needs of the U.S. war machine reflexively feed on one another in the United States Treasury market. If long-term U.S. Treasury bonds offer no safety for investors, then their money will seek out alternatives. Gold, and most importantly Bitcoin, will begin to rise on true fears of global wartime inflation. The writing is already on the wall, with Bitcoin up 15% this week, and the gains followed U.S. President Joe Biden's address to the nation on the Ukraine and Israel wars. Now the blog post reiterates, directly after the Biden speech, Bitcoin, along with gold, is rallying against a backdrop of an aggressive sell-off in long-end U.S. Treasuries. He says, this isn't speculation as to an ETF being approved, this is Bitcoin discounting a future, very inflationary global world war. Hayes is well known for his predictions of how global economics will play out post-COVID-19 and subsequent inflationary eras. Hayes says, as part of the knock-on effects for Bitcoin, a $1 million Bitcoin price tag is in play. This will come as a result of the so-called yield curve control, the ultimate move in controlled economics already beginning to rear its head in Japan. Hayes says once everyone realizes the game we're playing, the Bitcoin and crypto bull market will be in full swing. This is the trigger, and it's time to start rotating out of short-term US Treasury bills and into crypto. And billionaire investor Ray Dalio, founder of the world's largest hedge fund, Bridgewater Associates, recently put the odds of a World War III scenario developing at 50%. Meanwhile, billionaire investor and founder of Pershing Square Capital Management, Bill Ackman, has closed his short positions in long-term U.S. Treasuries. The prominent hedge fund manager decided to take the step due to the state of the economy and the nation, seeing that the United States economy is slowing down faster than data had earlier suggested, in addition to the challenges encountered at regional banks. Ackman believes that a recession is coming in the fourth quarter, and we are starting to see the decoupling of stocks and crypto, where stocks can go down, but because of the hedge against inflation, along with ETF hopes, Bitcoin and crypto are going up. But make sure to check out Randy's TA video on our Altcoin Buzz trading channel to see how to trade this market. After BlackRock's Bitcoin spot ETF was listed on the DTCC list with the code IBTC yesterday, it was thought that it was only a matter of time before the Bitcoin ETF would receive approval from the SEC. But the listing was removed yesterday, and Bitcoin experienced a decline after the news, dropping to 33,200. However, it was then listed again late last night, and with this news, Bitcoin rose above $34,500. After yesterday's delisting move, Bloomberg ETF analyst Eric Balchunas made the following statements on the subject, saying, "I can't say that I'm completely surprised. My guess is that BlackRock was told to wait until it's days, not weeks or months away." Despite the delisting, the listing again strengthened the idea that the BlackRock spot ETF would be approved in a very short time. In a blog post on October 24th, Charles Yu, a research associate at Galaxy Digital, projected that the total market size for Bitcoin ETFs could reach $14.4 billion in their first year. He derived the 74% price increase estimated by comparing the potential impact of funds inflowing into Bitcoin ETFs with that of gold ETFs. Galaxy Digital argues that ETFs could offer a more efficient investment vehicle than existing options like trusts and futures, which currently hold over $21 billion in value. The firm anticipates that fund inflows could increase by $27 billion in the second year and $39 billion in the third year. Recent market reactions underscore the high demand for such investment vehicles. Last week, a mere rumor led to a 10% spike in Bitcoin prices within hours. Similarly, the announcement of BlackRock's proposed Bitcoin ETF led to a 12% gain. Charles Yu also believes that his estimates are conservative and do not account for the second-order effects that could follow the approval of Bitcoin ETFs. He expects other global markets to introduce similar offerings, further boosting Bitcoin's appeal. Looking ahead, Yu suggests that 2024 could be a pivotal year for Bitcoin, citing potential ETF inflows, the upcoming Bitcoin halving in April of 2024, and the possible changes in interest rates as a key factor that could influence its price. There seems to be no breaks to the Chainlink price rally as Link price shoots another 12% to extend its weekly gains by more than 50%. At the time of writing, Link is trading 12.5% up at a price of $11.42, and a market cap of $6.4 billion. This mega price surge has helped Chainlink to become the 12th largest cryptocurrency by market cap. The recent price surge helped Chainlink add more than $2 billion to its valuation. Over the past 7 days, the network has seen a remarkable 112% surge in active addresses, alongside an impressive 190% increase in new addresses. This growth is further reflected in the uptick in transaction activity, as Chainlink reached a 7-day peak of over 12,000 transactions on October 23rd. Additionally, there's more positive news on the horizon for Chainlink enthusiasts, as the launch of Chainlink Staking V2 is expected before the end of the year. Many believe that Link supporters will continue to accumulate in anticipation of this event. At the same time, Vodafone's digital asset broker, or DAB, has integrated with the blockchain network Chainlink after completing a successful proof of concept trial with Japanese trading firm Sumitomo. The goal is to enhance document transfers and financial transactions in the $32 trillion global trade industry. The proof of concept leveraged Chainlink's Cross-Chain Interoperability Protocol, or CCIP, to allow Vodafone's edge IoT devices to securely provide data to blockchain contracts and AI systems. According to Vodafone, a key use case could involve cargo vessels autonomously communicating fire alerts via DAB and CCIP to trigger insurance claims. By integrating DAB with Chainlink CCIP, Vodafone plans to offer an integrated interface for transferring data, triggering smart contract execution, and enabling token movements. The ease of linking real-world data to various blockchains is expected to unlock new use cases. Injective has catapulted to a significant milestone, breaching the $12 mark as bullish momentum continues sweeping the crypto markets. Over the past 10 days, the digital asset has been on an impressive winning streak. Injective's recent meteoric rise can be attributed to a groundbreaking product feature unveiled by Helix, the decentralized exchange built on the Injective Layer 1 blockchain. On October 19th, Helix introduced pre-launch futures trading, allowing crypto enthusiasts to speculate on unreleased tokens before they hit the official market or exchange listings. This move created a chain reaction, leading to an influx of users to the Injective network, and the on-chain data paints a vivid picture of the surge, with 133 new Injective wallets created on October 20th and 22nd, marking the highest network growth since mid-July. The spike in new users could be a bullish signal, indicating heightened demand for the native token and the network services. While the surge in demand has propelled Injective's price to a 20-month high, on-chain data reveals that an additional media frenzy is approaching euphoric levels. The Injective social volume score hit a 65-day peak of 123 on October 20th, signifying a potential increase in mentions across crypto media channels. Historically, such extreme media hype has often served as an early warning signal, and the price might reach a local top, prompting strategic traders to consider exiting. Based on this historical trend, it is plausible to anticipate a retracement if holders begin to lock in profits in the coming days. Injective is currently trading around $12.50, up 50% on the week. That's it for Altcoin Buzzy's update. I'm Cody Buffington. Thanks for watching.